The first quarter earnings season, as we say, may be giving some mixed messages to investors, but which stocks are worth buying? Joining us, Professor David Costa, Dean at the Robert Kennedy College. David, always good to see you. Thanks for joining us.
Hello, Ross. Nice to see you.
Nice to see you. Look, we just had these Nokia numbers out. Are you willing to buy any tech stocks?
Yes, but very limited to some few names.
Okay, Google is the one that you would put in. Why?
Google is my tech pick at the moment because regardless, there's been a lot of discussion now about the clicks going down. I mean, let's not forget that their advertising model is based on click-through, on clicks on the internet. So there's been a lot of discussion about Google future not being so secure. But the reality is that if you are an online advertiser, advertising online, Google is still indispensable. They still have a lot of the market share. The one of Yahoo is still neglectable. So Google will still have a great opportunities in the future. It is something to buy. If you want to buy a tech stock now, seeing how much they lost, it's probably a good bet for the value investor which wants to wait a little bit. But Google can give you some satisfactions.
Okay, everybody's worried about the consumer. Yesterday we saw, I think it was Carnival Lines launch a new cruise ship, and you like Royal Caribbean cruises. Explain to me why the cruising business is not going to be impacted by a big slowdown in consumer in America or indeed in Europe.
Okay, Royal Caribbean is the one which announced yesterday also a new ship with a sort of central park inside the ship, which is quite innovative. So it had quite a good rally yesterday as a share. But the situation in the terms of cruises is the following. I do see people in a US recession saving more but not giving up much of their vacation. So I don't see the numbers being impacted as much. I've seen a lot of losses on the shares penalized by the price of oil, but the cruise lines are just passing the higher cost to the consumer because they have now an oil surcharge fee that has to be paid. So I don't think they will be as impacted. That's the first reason I suggest this share. The second one is we have at this given time think about investment and not about trading. So we don't have to think about buying something today and sell it tomorrow. So we're looking at value opportunities now, and at the PE ratio that are currently trading Royal Caribbean, I like it more than Carnival. I think it could be a good investment for the future. It might not be something that happened now, it just happened before because they have this new ship, but for the future I don't see all Americans or the majority of Americans giving up the holidays because the crisis is not as strong. Let's not forget that the down is just down few points percentage from the beginning of the year, and if we compare it to the European situation, they're doing much better than here.
And just finally, Procter & Gamble, pretty steady, conservative consumer products company, just a good one to have, yeah?
Procter & Gamble is a conservative pick. In a portfolio, it's very much the favorite now. They have a very well diversified range of brands that you cannot give up on, from Gillette and many consumer products. So Procter & Gamble is among those companies, sounds pretty obvious, but those companies that can pass higher cost to the consumer, and very often the consumer cannot live without them. So it's certainly a conservative bet to have in your portfolio, together with maybe something a bit more aggressive. I said before about technology, which is certainly not for everyone. I will try still to stay a bit away from financial now. Last time I had a financial pick, this time I don't have a financial pick because it's still too early, I think.
Okay, David, thanks for that. Good to see you. David Costa, Dean David Costa, Dean of the Robert Kennedy